What's up, guys? It is Tuesday, November 8th, and it's 9:16 a.m., and this is the crypto market update. So starting off with the government bonds, we're watching that key level, 4.24%. So we grab this top to this bottom, and we see that that's that 786 Fibonacci retracement. Last night, we actually did tap it, and so far we are seeing a sell-off from that point. But I mean, it's the start of the day today, so we're going to have to see how the rest of the day pans out. But for right now, we are seeing some momentum move back down. It's just a matter of if we come back up, getting rejected by that 4.24%. And it looks like we filled this gap over here because we had this gap right there and we came up and we have filled it. So that's good. That's a good sign as far as, all right, there's no more gaps on the upside. If there's any gaps to the downside, nope, no gaps to the downside. So we filled the gap to the upside right here. So now we can actually turn over here and it can fully break down from these levels without that cautionary kind of feeling of, oh, well, we haven't filled this gap up here. Now that we filled it, all right, now we can start talking about heading back down. Let's go to the daily chart. And what I want to see for this is like a fake curling, like we're going to cross up here and gain momentum. But so today I want to see us actually curl back down with the bond yields. And it does seem like that might pan out today. If we go to the 12-hour chart, if we start to see this cross back down on the 12-hour on the daily chart, that won't cross, and this will actually come back down. So that's what we want to see. Then if we go to the dollar right now is sitting around 110.33. If we take this low to this high, we stretch it out, you can see that we're just kind of hanging around the 786 Fibonacci retracement. This is like that key level that we want to break. So we have a 4-hour prepare to buy soon. We don't have that buy now vertical blue line yet. So that is a good sign. We don't want to see that because vertical blue line, bam, we went up. Vertical blue line went up. Vertical blue went up. We want to see continued sell-offs and we want to see more vertical green lines come in that will signal that, hey, we're getting really oversold. We want to see that happen. Then if we go to this low over here, so this low to this high, stretch it out, we can see that if we break 110.27 where we're at now, then we want to break 110, of course, the psychological level, but also 109.55, and then ultimately 109. If we can get below 109, then we're looking pretty good. That will be the level where on the 12-hour chart, we're breaking down from the 200 moving average. Let me pull that up. Yeah, we break 109.36. We're breaking the 12-hour 200 moving average, and we haven't done that very long time. So that will be the nail in the coffin for the dollar, and that's what we're looking to see. We want to see that happen. Then if we go to the daily chart, daily chart's looking good as far as, hey, we're starting to lose momentum. This whole kind of run up, we've been holding the daily EMA ribbon as support. And this time we're getting multiple candles kind of close below it. So this is starting to shape up to be a good sign. We're starting to see the EMA ribbon start to cross down through this 50 moving average here, the green line. This is starting to pan out. This is starting to look like, hey, we really might actually curl over here in the dollar. We can see that if we do fall down lower here, that 109 level, that if we break, that's looking good to shoot us down a little lower. We can take that and then we can drag this down. And that's perfectly in line where the 200 moving average is on the daily. That's in around like 105. That'll be a solid move for cryptos if the dollar can pull down like that. So we need to watch the indicators down here to see if we're losing that momentum. We still are headed down in the momentum, so that's a good sign. Let's go to the Bitcoin chart. And if we go to the 12-hour, and I'm going to grab this low to this high, And you can see that we tested the 702. You see the wick right there. We could go a little lower, test 19,250. Let me actually put on the Fibonacci moving averages. Then we have the pink Fibonacci moving average sitting around 19,000. So yeah, so I mean, like, we have tested the downside retracement levels. If we grab that right there, it seems like a little deviation out of this kind of. We put that down. That's perfectly in line with the pink Fibonacci moving average. But what will really tell us if we're going to cross back up here is we need to see this MACD on the 6 hour start to go white, where we still have momentum to the downside. You can see it clearly. But if we go down to these lower time frames, we can start to get a gauge as to whether that selling pressure is starting to wean off. So the 2 hour chart right now, we still have that momentum to the downside. We need to see a cross up here. What we want to see is a stock RSI pull back up like that, the MACD like that. And then the RSI is down at levels that we found our previous bottom at, which is a good sign on the 2 hour. You can see if I put the horizontal line down here. Oop. So yeah, I'll put the horizontal line, and you can see that when we touched this line down here in the RSI, we found like a bottom right here. When we touch it right here, we found the bottom right here, and now we're at it again. So likely this will be a bottom, unless there's some miscellaneous events that go down today. This should be a bottom as far as what the indicators are telling us here. On the 1 hour chart, we have started to kind of curl back in with the MACD. We're seeing the stock RSI trying to cross up here. And the 30-minute, if we're going down to the lower time frames, we have turned green in the MACD. The stock RSI is curling back over, but we just need to see in the next, by 10 a.m., us kind of shooting up out of these lows here. If we break these lows, then we know what levels we need to watch. But so far, so good. We definitely need to hold 19,465. And kind of like where we're at now, 19,500 as support here, because that's that level that we said, 19,500, extremely important to hold, 20,000 and ultimately like $19,000. If we break that, it's not looking good. So we want to see us hold those levels today and have a daily close above 19,500 or at least 19,000. 19,500 is definitely where I want to see us hold by the end of the day. But we could come down to 19,000, hold that before we're going back up. If we go to the 1 day chart, we see that we're retesting the 50 moving average. So that green line right here, that was our area where we found like rejection point at rejection all through here. Then we broke up above it, and then we held the EMA ribbon as support initially, but now we've come back down to retest the 50 moving average, and that's sitting around that $19,500, $19,600 level. So that's why we want to hold at least a daily body close above it. We are seeing on the daily chart that we're crossing down the TSI, the MACD, and we're breaking below this 50 line here in the RSI, and the stock RSI is crossing down. So it's going to be definitely an interesting day, volatile day. We got the midterm US elections today. We got the super blood moon today. So it's going to be a very mysterious day as how this goes down. It's going to be a lot of whipsaw action, I feel like. And we have to be on our toes for any surprise events to happen today as well, too. So now let's go to XRP. XRP on the 12-hour chart, it's retesting the 200 moving average here. So we're right now holding it as support. We could go lower, and would be around the 40.4168 level, around like that level. That's where this previous low was when we went on our first initial run. Then we had our first sell-off. That's where that low is. So we could definitely go there. And we can put this up like that. And yeah, that's why. So in the Discord yesterday, we're calling this real time. And so that's why you want to get in the Discord, because we're keeping people updated real time. So yesterday at 10:30 p.m., 44 cents, very important level to hold. We break that level, 42 cents and 37 cents. Definitely in the cards, depending on the narrative as well. And it's going to be a volatile day tomorrow. Expect some whipsaw, and then eyes on the dollar as well too. We're keeping people updated in real time. when that kind of sell-off happened last night. So we got below 44 cents. Remember the key level. It seems like a hard move. It may have momentum. Key close happening right now. So we're saying that we're calling in real time. So awesome live update. And that's why you want to get in the Discord. The link will be in the bio. Yeah, you can see on the 12-hour chart for XRP, we're definitely we touched a key level last night, that 42.5 cent level. Need to hold that very least. If we break that, we have the 200 moving average sitting around the same level this wick went to, around 41.5 cents. If we take this Fibonacci from here up to here, we can see that the reason why if we don't hold that level here, that 38 cents is in the cards, because if we break this previous low right here, then we have the 1.618 extension out to that level. And then if we look at the macro pattern here, we take this low to this high, we stretch it out. We can see that's exactly where the 702 retracement is. And at 36 cents, that's where the 786 retracement is. Then if we take this trend line and we grab from the top to the bottom, and then we drag it down here, then there could be a head and shoulders pattern that brings us down even lower, around 34 cents. So that's why we got to watch that key level, because if we break it, we have more risks to the downside now. So there's two things you can do. You could sell out of your position and buy back in lower, or you could keep holding your position and you can hedge with a short. You can hedge with a short on one of the futures exchanges. So that's a couple options you could do. If we go to the 30-minute chart and then we look at this kind of pattern right here, we want to take this to here and we want to hold 42, like this 42.5 cent level. If we come down to this is what I want to see, the type of action. If we come down, like that, and then we pop up out of here and then we come back down and then we go like that. That's how we want to see that kind of price action go today. Then let's go to the 4-hour chart. Let's look at, still dark red with the indicators here. The MACD void lines, let's look at it. We are seeing an opening of the mouth of the void line, so signaling that it's been a pretty big move. You can see on the 12-hour too, we're starting to open up even more. That's why, to avoid a big move to the downside, we need to start retesting these areas up here. 3-day chart. 3-day chart, the EMA ribbon, have the body of the candle above it right now. That's why we definitely need to close the candle at least like where we're at right now. We don't want to see continued downside. If we do, we're going to retest those levels, that 38 cent to 40 cent level for sure. So don't be surprised if that's the case. Now let's go to XLM. If we go to the 6-hour chart, grab this low to this high, we're actually a little bit below the 786, which is around 0.1056. So if I take this low to this high, we can see that if we do fall lower from here, we have that 10 cent level acting as our very strong support. Definitely need to hold that. You can see how many reactions we had with that level all across here for the past months now. So if we do come down to that level, it's a must hold one. If we go to the 12-hour chart, we definitely need to get above that 11.1175 cent level to get above the 12-hour 200 moving average here. And then to the downside, we got to hold that 10 cent level for sure. We are seeing some signs of Stellar, at least, holding up strong or showing hidden bullish divergence. But we need to see these levels hold where we're at, and we need to see a quick rally back up. I don't want to see us hang around these levels for a bit. Then if we go to Songbird's been holding up pretty well during the sell-off. It's actually just been going sideways. But yeah, and then let's go to Ethereum, 12-hour chart. 12-hour chart, it's holding the 50 moving average right now. If we go to the 3-day, all right, this is a good sign. For Ethereum, we were getting rejected by this 50 moving average this whole time. We finally broke above it. And on this 3-day chart, we finally came back down and we retested it as support. So if we hold this level, this is pretty good price action here and kind of movement by Ethereum. So that level is 1400, 1430. So if we can hold that level and start to rally back up here, it's pretty normal to break out of a moving average, come back down, retest it as support, and then go back up here. So that's what we need to watch for Ethereum. And then, yeah, we're really at a critical level with the market. If I go to total crypto market cap, you can see on the weekly chart that we've come back down to retest this the 200 moving average here on this candle. Definitely want to see us hold that. We don't want to come revisit these lows down here. You can see that we have this trend line like that. We're getting really close to it. And then we have this one coming down like this that we just got recently rejected by. So like we're calling up within this triangle pattern. And this is going to, by the end of this year, this is where this apex goes. But we should see something before then for sure. We do see this. Maybe one little more, and then we go like that. That's what we need to be watching for. Like something like this, how this was going down like that. We had the trend line coming up. We're calling up, and then we go. And then if this happens, we don't want to see us roll back down. We want to see it start to push up. And we come back down there and then go. Now let's look at Bitcoin dominance because it's been a while. 12-hour chart. Or actually, let's go to the daily. On the daily, we have a prepare to buy soon. If we go to the bottom indicators here, we are seeing some curling up, but it could be a fake out. We so far have flipped the EMA ribbon back to red and getting rejected by it. But at this point, if we go to the 3-day chart, we can see we got rejected by the EMA ribbon and we're not yet above it. So we are still bearish with Bitcoin dominance. We see the MACD starting to curl back down red. If we go to the weekly chart, we do see the stock RSI did gain momentum, but now it's curling back down, as well as the TSI is curling back down. And the MACD went from turning green to now going back red. So if we can keep building this, if we can keep having this downside pressure with the dollar and seeing those momentums turn over, then, sorry, I meant the Bitcoin dominance, then we're going to see it fall off a cliff. So if we put this level here, it's such a key level, that 39% or 39.5% level. If we break that, then altcoins might go on a run, but it depends what the dollar is doing. It depends what Bitcoin USD is doing. So that's about it right now. I mean, it's going to be a very volatile day. We're going to have to see how the end of the day pans out. Yeah, so keep an eye on those levels. What I'm personally going to be doing is I'm going to be holding through it. Any dips, I think I wrote it in here in the Discord. So I said 44 cents, hold it on a key time frame close. We're good. If we don't, those scenarios outlined will happen, but that doesn't change the macro direction. It would be a quick dip and likely bought up quick. So don't try to get fancy with it. I'll be holding and buying any dip below 40 cents if that scenario presents. But until tomorrow morning, we shall know if 40 cents is truly broken or if we're going to hold it. So if you're not already in the Discord, link in the bio, join the Discord so you can get updated in real time with what I'm doing and what these automated signals are flashing. Okay. So that's it, guys, for this crypto market update. I'll see you guys in the newsletter.